Well, we've got all-time highs in the Dow, the S&P, NASDAQ, and some of the European markets as well. But it's the NASDAQ that really interests me at the moment because it's in absolute beast mode, and we have NVIDIA coming out with earnings next week. And if there's any stock that knows how to blow the lights out, it is them. Remember last quarter, the stock was up 16%. That could be a big catalyst for markets. We've got the FX markets looking pretty perky at the moment, certainly with the US dollar finding a few friends and starting to see momentum build to the downside. We asked why that's happening and what effectively could turn that around in the short term. But that move in the dollar and what we're seeing also in real rates is affecting the gold price, and we're seeing that moving into 2,400. We're also seeing silver pushing into $30, and commodity markets are looking pretty lively themselves at the moment. And we asked what the catalyst could be in the short term. It's time to get in front of the screens. This is the trade-off. Well, hi there, my name's Chris Weston, Head of Research here at Pepperstone, and we're joined in 2 seconds by Blake Morrow from Forex Analytics, and we will be discussing some of the big factors that are moving markets at the moment. There's a few things going on, as there always is, but certainly right now with the markets at all-time highs, you know, we're looking at positioning, we're looking at whether this trend can continue, and looking to really assess where the probabilities in markets lies. We'll look at some of the chart setups and ask really what the trade is, as well as looking at some of the plays that we've got front and centre. Mr. Blake Morrow, I want you to come into the programme. We are going to mix things up a little bit today. I think what we're going to do is we're going to, rather than sort of go through the individual talking points, let's just go into a scrum down. Let's get head to head and have a bit of banter in a sort of a more lively confrontation rather than the individual points. We'll cover all the areas of the markets. But yeah, let's go into a scrum and let's battle it out and discuss and dissect everything that's going on in financial markets. But you're going well?
I'm going well. I'm ready to scrum down, I think. Whatever that means.
How do you call it? Scrummage over in your part of the world, or scrimmage?
Scrimmage, but yes, something like that.
Yeah. All right. Well, let's go and check out I think let's call this the market pulse. Let's take a pulse of the market. Let's call it market pulse. See you there. Okay, right. First of all, we've just seen the US CPI number coming out. That came out at 0.29% on the core number month on month. The market's found some pretty good relief that we didn't get it rounding up to 0.4. If we have a look at the super core number on a month on month basis, it has dissipated from last number. It seems that services inflation has dissipated a bit from what we saw in the last period. So after 3 months of price pressures coming through, the market's seen something that is likeable. And also then you've got the retail sales numbers with the control group element dropped 30 basis points. It feels, Mr. Blake Morrow, that the market has gone from a no landing camp to a soft landing camp, and they probably like that. So, you know, how have you seen the CPI number, and ultimately let's go through the market reactions that you've been focused on and trading.
Well, it could have been worse, right? I mean, remember last week we talked and we highlighted the fact that all G20 countries, there was like 3 countries that maybe missed some inflation numbers, but overall it was pretty hot across the globe. So to have numbers come in line with expectations, I think everybody said, well, you know, it could have been worse. And so therefore could have been worse is porridge. I know everybody uses the analogy now. We've been using it for a long time. Porridge isn't too cold, isn't too hot. It's just right. So between that and a little softer retail sales numbers, I think that allowed the market to really, you know, think that the Fed's not going to be raising rates. They're going to maybe even be a little bit easier moving forward, and maybe they can start thinking about pricing and more rate cuts as the year goes on.
We've got a full rate cut now being priced for September. We talked about this before. It seems a bit crazy that they're going to cut rates in the meeting before the US election. They're going to be obviously people are going to call them politicized. I'm sure Trump will, but we've got 25 basis points being priced for September. We've got 2 rate cuts by the end of the year now. The question I'm going to ask and I'm focused on now is that I think what we've just seen is good relief coming through in markets. That's the initial situation. So the question then is we've got equity markets which ripped. You know, the Nasdaq was up 1.2%. We saw 2-year Treasury yields down 9 basis points or so as we talked about those rate cuts. But can it continue, or is this just a one-day relief rally affair?
Well, that's the thing is the market reaction is pretty euphoric as you point out. And I want to say it is this more of a, you could call it a relief rally, but I think, and I look across the scope of people that I follow, analysis that I read, economists that I follow as well, macro research, everybody thought the top was in. And today was a real natural, it was almost a gimme for the market. Like, okay, market was wrong. Market got squeezed. We broke above the highs. The question I'm going to have moving forward is it sustainable or is this just a squeeze? And
I think it's
right now, I'm just saying it is a squeeze, although I don't want to fade it necessarily, but I think it's just a squeeze, poor positioning in the market. That's the way I'm looking at it right now. That's the way I'm trading it. And I'll talk about how I'm trading it when we discuss a little bit more about currencies. But
I think discretionary's in the doghouse at the moment, rightly so. We've seen the retail numbers, Starbucks or some of the other companies talking about retail numbers. But what's working now, and again, we come back into are we going to see concentration in the leadership? But we've got NVIDIA numbers coming out next week. The market's expecting about a 9% move up or down on earnings, so you could see that one flying. They've lacked a catalyst recently, and some people have said we've got an oversupplied chip market. But if the CEO Jensen Huang, who is a rock star, just knows how to hit the sweet spot every single time, comes out with new initiatives, how they're going to maintain market share, monopolistic share. Partnerships, all these factors to continue the growth, maybe some increased capex like we've seen some of the stocks. The stock's up 9%. Then that will feed through into the semis, into the AI related chip stocks, and you've got a Nasdaq that's in beast mode, and obviously you've got the flows taking place. And I think what's different between now and late March, where we saw the prior all-time highs, I think positioning's far less stretched in equity markets than it was then. But yeah, I still think that these markets go higher. And I think if tech continues to find this bid that we've seen in the last two sessions, I'd be focused on the Nasdaq outperforming here. But I like the Fed puts in the market. It seems weird, doesn't it, that we've got the S&P all-time highs and we're still talking about 2 rate cuts coming through. So financial conditions are easing.
Yeah, and that's another thing. We could discuss, yields coming down. I really do want to discuss the currency response here. But the other thing is yields are probably coming down for a reason. And that's, with economic data looking to be a little bit more soft, that's, I think, the could be the Achilles heel in the markets rally that we're seeing. But it still is, like we discussed last week, it's kind of like a relay race. And, the baton had got passed off from Europe over to the U.S. today. And the U.S. broke new highs where, some of the European markets kind of stalled a little bit. But
can I ask you a question, Blake? Because look, the US dollar is starting to trend lower, bear trend. Yeah. But is this just for you? I mean, is this just a question now that is growth the driving factor now? Because the US is slowing down. We've seen retail sales obviously quite poor. University of Michigan numbers the other day were tepid. The services ISM, we've seen a cooling in the labour market reads. Jobless claims will be really interesting tonight, but last month they spiked up. Non-farm payrolls have come back a little bit to 175. So we're starting to see US growth cooling. It's still pretty good, but it's cooling, right? Consumption seems to be cooling. Whereas European and UK growth is rising off very, very low levels. But is that mean reversion that we're seeing there, is that that's causing the US dollar to bear trend, euro to break 109?
That to me is really going to be the catalyst. And you have to think about next week, Chris. We'll see once again Eurozone PMIs, UK PMIs, US PMIs, and we'll see if that convergence happens more, where European growth stabilizes and the US starts to really falter. So next week, that's going to be kind of the thing that I'm going to be looking at towards the end of the week. But, one of the other things we should discuss is this move that we're seeing in commodities too. I mean, look at what's happening in gold. Look silver's about ready to break $30. I mean,
yeah, I know. It's crazy. And copper's the one everyone's been focused on. And the curve now, if you look at the futures curve, in crazy backwardation, if you're a futures trader, you're just going long front month and just rolling down the curve and picking up the carry. But gold, I mean, I think what you've seen is from time to time, it has these different relationships, and we always try and pick which one. Right now, I think the really powerful force is that you do have a trending US dollar to the momentum is shifted to the downside. You've got real rates and you've got some signs of economic cooling. So gold's found its mojo. Silver, the high beta currency, is doing well. So take a view on the dollar. I still think there's downside. I'd be selling rallies in the US dollar right now, and I think therefore that gold breaks 2,400. What do you think?
You know, the one thing that we haven't talked about, and I just want to mention it really quick. You know, crude oil. We're in a really, really tight range between 77 and $80. We should watch that range. I think if it breaks, it's going to give us a little bit of clues on how to read the global economy. I'd be watching that really carefully.
You've got on the 1st of June, you've got the OPEC Plus adherence meeting effectively, and there's some talk that they're not meeting their quotas, so that could be an interesting one as well. But you're right. I mean, the International Energy Agency yesterday came out and said demand is falling, but I think you make a good point. Quick one on the dollar. I don't think you gave your view. Where do you sit on the US dollar short term? Very quickly.
Can we wait till we get to the setups, please?
Good segue. Let's go to that's a setup. Right, I'm gonna start the proceedings because Aussie dollar. I just love the structure of what I'm seeing. I mean, Aussie Swiss is going to be my trade of the day. Spoiler. But look, I love what I'm seeing here, Blake. You know, we've had that series of downtrend that's been in place. We've broke the downtrend. We came back, we tested it. You can see that we bounced off that level. We've got that horizontal resistance levels that you've seen. I know that's a US dollar play. You know, when we broke and we smashed that, we saw range expansion coming through. It was double the ATR to 5-day ATR. I love to see that, and we can see now it's starting to sort of test that upper Bollinger Band. And when you start seeing bull trends, you see it price hugging above that level. Now I'm using that 5-day exponential moving average, which is the the red line there. And the question is will this kick? Will it kick through 67? Now I'm saying this before the employment numbers. I think they'll cause a short-term blip, but again, we've got that rate setting as the US economy cools. You've got those rate cuts that are being priced in. Australia, they've priced out rate hikes, and we're now at a very flat structure. I love the shape of this one, Blake. I'm buying pullbacks in this one. I think this one goes high. Obviously, China's a big decision there, but I just love the structure of what I'm seeing here. I'm buying pullbacks. I think this goes higher.
Well, let me get to the U.S. dollar in just a couple of steps, and then we'll talk a little bit more about what I think about the U.S. dollar. But let's turn it to the Russell 2000. We're at really the do or die level in the Russell. Now, you know me, Chris. I like to prey on the weak, and this is the one market that we've highlighted consistently throughout 2024 that has just struggled. It's struggling again. It's trading around this 2150 level, and it's a big 618 retracement. I do believe it's a big do or die place. And look, if you're a bull, got to look for a breakout. Remember, this is a setup. That's what this segment is about. The flip side is if you're a bear and you're like, I don't believe this market rally, this is the index you want to really be focusing on is the Russell 2000. And I love we know we're around a key Fibonacci level, and I think it sets up for either bulls or bears. If you want to be bearish, short it here, put your stops above the 618, and then flip long if it breaks out. If equities continue to break out, as Chris is making a good case here, maybe the Russell 2000 plays a little catch up. But I love the fact that we're pivoting right where we should. And again, if you want to think about the markets on the short side, this is the index I'd be focused on.
Yeah, before I get to go, quick comment I will just make on that one though. If we are, I'm not in the recession camp in the US. So eventually the US will have a recession, but it's not going to happen anytime soon. But if we are seeing a cooling of economics, if we do believe that labour markets are now actually starting to cool after a lot of people, I think in a time when the US economy is coming off the boil, you're going to see an underperformance of the Russell relative to the Nasdaq, and so long Nasdaq, short Russell would probably be a really good trade in a cooling US economy. But I think it's a great setup. So thanks for bringing that to attention. Let's go into gold because it's getting a lot of attention. We talked about what was happening in gold in that last section. But again, we've seen that kind of rounded bottom. It had the breakout through the April high, the 24th of April high, spike high. And it's a little bit like the Aussie dollar. You've had this. Is this going to start trending? Do you fight the trend or you stay with it? Now, Yeah, we've got a lot of clients who are now starting to fade this move because they just don't like it. We saw big supply coming into the market through April above 2,400. They want to be involved in that as well. I'm not going to critique that position, but the way that I like this at the moment is if that US dollar does continue to kick lower, if we see the dollar index, which is now trading through the 50-day moving average. Spoiler, sorry, Blake, I've taken your thunder there. But if we, I think rallies are to be sold in the US dollar. I'm not overly bullish on the fixed income market in the US, but if we were to see nominal and real rates moving lower, then I think the gold price goes above 2,400. You've got a pretty clean structure from a positioning perspective. If you have a look at optionality, no one's really euphoric. There's no one massive skew of buying calls relative to puts, and we still haven't seen those big inflows into the ETF funds, which a lot of people say is the kicker. So I don't know if this is going to run. I have no insights on that at all. But I feel like the setup is there for it to happen. If it's going to happen, now's the time. So I like this one from the long side, tactically in line with that US dollar move.
Well, that's why they call it a setup. And you know what? I'm going to take you over to the US dollar, give you my opinions here. Look, Chris, I just got out of Aussie longs. And just so you know, the technicals say it still goes a little bit higher, but I closed out my position. I've been long for literally the last week and a half. So between that and the Kiwi from last week's setups, I took my longs off the table today. Why? Because the dollar index just completed a double top. It also reached the 38% retracement of the December lows to the April highs. And we're at the 200 DMA. Yes, we did break below the 50 DMA. You spoiled it, but we broke it. But we are on the 200 DMA according to the dollar index, the actual index, and also the Pepperstone ETF or ETN. Is that what you guys call it? CFD, sorry. CFD that you guys trade. We're right on the 200 DMA. Look at the channel support that's slightly below the market, about 104.10. This is going to be really critical because I'm assuming the dollar is going to get punished as we go into Asia and European trade. But watch for a pivot. Now that we've completed this, now that we're at support, I think you got to be a little bit more careful being short the dollar just because it's had a nice fall from grace over the last couple of weeks.
Yeah, I like that. I wouldn't be chasing euro dollar higher at these levels. I'll be waiting for a move into say 109.50. Just a little bit run, but it's an interesting one that we've got to keep our eyes on that jobless claim. The next big one after that, I think next week will be interesting. Blake, Christopher Waller on the Fed speaks on the 21st. He speaks this week as well, but he also is speaking on payments. Next week, Christopher Waller, put him on your radar, 21st. He's actually going to be really interesting to hear what he has to say. But the next big one after that, and it's going to be payrolls, but that doesn't come through, I think, until the 7th of June. Anyway, good chart. It's a make or break. I really wanted to sing that. It's now or never, but I won't. Anyway, let's go to play of the day. Well, you said that you closed out of your Aussie positions. Well, I'm going to talk about my Aussie position because I like the break. I've been talking a lot about these breakouts. There are breakouts taking place in quite a lot of markets at the moment, and breakouts require science in themselves, right? A lot of breakouts fail. We talk about that time and time again, and when they do fail, you've got to take that off the table. But when they do run, you've got to hold on to that position. It is the art of holding. Close those failed breakouts quickly. Take the loss, take the small loss. But when they run, you've got to let it run. And that's where I think a systematic approach comes in very, very well. Now, what we're seeing with Aussie Swiss is this has run. And we've seen it breaking through those recent highs with really good range expansion. What I also like is how price closed at the highs or very close to the highs. That sometimes tells you about the ownership. The market is the bulls are firmly in control. This could kick, but I want to take that loss very, very quickly. And that would be a daily close below the 5-day exponential moving average. I think that would be the line then. So I don't know if this is going to kick. I have no insights. I hope it does. But if it doesn't, I want to get out on a daily close below that 5-day exponential moving average and take a small loss. And I want to let it run.
Well, Chris, my play of the day is in line with yours. And we're going to be on the same side here with the Swiss yen. And, if you're American and you understand Dunkin' Donuts commercials, it's time to make the donuts, but we're going to make Swiss sake because that's all I've got here instead of Swiss cheese. But, the fact of the matter is we have a nice little failure. I know where my risk is. While we're trading below 173, I'm looking to actually short it. We had dark cloud cover on the daily candle today. We're making lower highs. We're up against resistance that's plagued us literally all year. And then if you guys remember back in March, mid-March, we were at the 200 DMA and I said, you got to be careful with shorts. I closed out all my short positions. Well, now I'm looking to re-short it again while we're up here below 173. I am looking to trade short. I am already starting to get myself in as of an hour ago, and I'm actually looking to add to my shorts, running it back to the 200 DMA. So we're going to make some Swiss sake instead of Swiss cheese this time around, Chris. And that's going to be my play of the day. And it is in line with your Aussie Swiss longs as well.
I really like this one. Because I'm actually looking now at dollar yen shorts. I think dollar yen goes lower. I think that we've had a DeMarco reversal there. And I think, Swiss, the big one for Swiss is early June. 4th of June, I think it is, they've got the CPI number. Now, that's going to be important because on the 20th, they've got a central bank meeting where the market's almost 90% price for another rate cut from the Swiss National Bank. So that I'm not sure if you're going to hold your positions till then, but I think we are warming that, and I think I quite like that trade as well. So Swiss yen to the downside. Anyway, Blake, thanks for your time. For all the viewers out there, thanks for sticking around, and we really hope you appreciate the views. And if you've got any of your own, leave them in the comments box. Smash the like button, and we'll see you back next week for more of the Trade Off.